Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on stock charts, we'll look for long time frame trade. Please subscribe to my articles and Twitter feed for updates throughout the week. Okay, so the rally that was kind of stalling looks like it's reinvigorated itself, and we got a lot to talk about. So the US dollar, after running to the bottom of the range, has now stalled at the top of the range today. One day doesn't make a full-time stall, but it definitely means we should watch what's going on there. KBE and KRE are trying to turn higher. So after about 2 weeks ago, they were looking like they were ready to break down to new 52-week lows, 2-year lows kind of thing. And now all of a sudden they've sparked a turn. One of the reasons that would cause that is the bond market RSI on just about every chart was at the top of the range. So anyway, we're going to look a little bit into that. The advanced decline lines continue to accelerate higher, but the net new highs do not. I think we're going to have to go with the advanced decline lines data because the net new highs, well, it's going to have to catch up soon or not. But I think it's important that we go through all the currencies because I think if we get this currency light switch that I think is going to flip, that would change some things. So anyway, we'll jump into that and talk about it. So the first thing I want to just bring up are these banks. And one of the points I want to make on these banks was a few weeks ago, this was rolling over and looked like it was going to start accelerating lower, and that's a big deal. Conversely, if this whole chart, you can see that big 2-year downtrend in momentum, if this is going to start breaking out to the upside, I don't want to be bearish because this is, you can see when these trend lines break, and here it was back in 2015-16, there's a little short one that broke here. If nothing else, you broke through here and you started to move above zero. And when you get positive momentum on the banks, you do not want to be bearish. That's pretty hard work. So anyway, they broke out to new relative strength 2-year lows, pretty ugly. And then all of a sudden, here we are. What do? We just turn around and accelerate higher. So really important. We're at the 10-week moving average, the 40-week moving average. The prior highs are right here. Just watch closely. If this stalls and fails, fine. If it doesn't stall and fail and starts to break out, well, within a couple of points of the lows, or what I guess would be almost 10%. But after seeing new relative strength lows, this wants to start to move higher. That's a pretty important change in momentum for us. So from what was rolling over is now starting to turn up. And if I was wrong for 2 weeks, I'd be happy to be wrong and then set this up to go higher. So that's good news. Just go show you. So that was the main banks. This is the regional banks in the US. And they have the same chart shape taking place with this big long-term trend line trying to break out. And if that was going to happen, your full stochastics would start to turn up around zero. And again, these are weekly charts. So looking at this, just, the scooter ranking looks horrible. The relative strength ranking looks horrible. They're rolling over right at and sitting under this 40-week moving average. What was support is now resistance. There's a whole bunch of reasons to be bearish, but I think if your momentum is going to start breaking out and going positive here, you don't want to be caught on the wrong side of this trade. So that would get me way more bullish on the banks, and I'd rather be bullish and watch them try to accelerate higher. And if they fail, then we'll have to play that trade. But the full stochastics moved way up to the top of the range. If it comes down and starts to bounce around 50, that's a bull trend. That's an important change. So here we have one over here. And it ran up for another, 3 or 4 months. That would be worthy. Came down here all the way to the bottom, got up here, bounced, took off to the upside, came back down here. This was a beautiful buying point. And that's really kind of the same buying point we'd be looking at here with the momentum trend starting to break. And that was just a great place to get on board for an almost 9-month trade. So anyway, again, without this big solid bounce last week and we're only a few days into it. But this to me is setting up to break this 2-year trend line. And that would be something that I would consider significant. I have one other thing. If we don't get to it, I just want to show this. This is a chart that I've put in my recession watch file. And what it is 1995 we didn't actually have a recession, but 1990 we did, 2000 we did, 2007 we did. Well, we started one, and then so every time this big trend line broke, and this is the 30-year yield minus the 10-year yield, and I mentioned it on the show last week that might have been on the Saturday video, that when these trend lines break, it's at least an important place. Now, these are a little steeper. You can see this one is a really long one building. This is an 8-year trend line. This one in here, 2003 to 2007, was a 5-year trend line. So this one is mammoth in terms of proportion. It's way bigger than anything we've seen before. But if this was going to start to break out now, it would be critical to watch. And we had weak job number data from, I think it's IDP, but with that this morning, and then on Friday we'll get more data. I think we get the actual jobs report. So when that comes out, we'll see how the market responds to that. But all of that puts us on pins and needles to see, is this going to hold up, or are we going to start to break out to the upside? And I think we'd all agree that if this starts to break out to the upside, that's probably a better cautionary tale. So am I fence sitting? Well, I would just say that, you know, the data is all right up against the trend lines on both ways. So if the banks fail at that trend line and roll over, and if these charts fail at this trend line and break out, then that would confirm that we've got more weakness to come, and this would be a very good time to be defensive. If this stays under this trend line, and if the banks start to break out, then we're going to have to get more bullish. So anyway, that's kind of the way I'm looking at it, is that we're at that inflection point, and you know, it's just very difficult to call here because we haven't broken out on either one of the charts. We're just sitting under them, the things that I like to look at. Okay, so here's the US dollar weekly, and this goes back to yesterday's close. And what we see here is we're starting to make higher highs and higher lows. We're right up against this 97 level, and I got quite a few charts in the currencies here. But the reason that I want to pay attention to the currency is it's such an important tool for a whole bunch of things, for emerging markets, for all our trade relationships. So we'll see a lot of the foreign markets react to this. We'll also see commodities react to this. So, you know, this driving sideways here for almost a year is really making all of the commodities trading difficult. And if I just popped over here to show you one chart that, you know, on Saturday wasn't breaking out, but today it is. Here is coal and SLX. This is the steel chart down in the bottom. And look at this. All of a sudden, it's at new 6-month highs. Wasn't there just a couple of days ago. And here we have the coal chart. You know, it's broken the downtrend. There's horizontal resistance here at 14, and it's trying to scoot up. So these two things make it look like we're going to start to run. Unfortunately, we haven't seen that yet in the currency. So I'm trying to figure out which way this currency move is going, and it's very difficult to figure it out. But that's what I'm watching. So here's the sideways trading range again, going right back. Well, we even saw some of this level up in August of last year, but here we are up in April, and again back near the top of this range. So watching the US dollar very closely to see which way it wants to go. Oh, and just to kind of point that out, here's the momentum line on the daily, and it's just sitting right at it, right at the 0 level. It couldn't be any more indecisive. Okay, UUP this morning, you can see, so this is the ETF that tracks the US dollar, and we can just watch it to see which way it's moving. But in general, we gapped lower, and now we're at the top of the range since this morning's open, not the overnight range. But here we go down here on this big trend line, and you can see if this is going to start to break out on either Martin's KST or on the PPO, you know, that's what I'm watching for. And waiting for this to happen is very slow, deliberate, watching it quite intently. Here's the euro, and you can see on this weekly chart, it made a lower low this week and a lower high so far, right at the bottom of this 112.50 range. And you can just see how this is just chopped for 6 months. Momentum is starting to roll over, looking like it would start to break lower. And we just don't have an answer yet which way it's going to break. And the German market has all of a sudden shot up and is at 6-month highs now, even though their data for PMIs and that kind of stuff has been weak. So here's the daily chart, and again, gapped up and is now pushing lower. So we'll just see, is this going to finally break out? And according to the daily momentum on the PPO, it looks like it is going to break out to the downside, but haven't got that final resolve yet. So continuing to watch that. Here's the Swedish krona, and again, it's trading at the low end of the range. This is weekly, but it just stays below that breakout. So it suggests to me that that's what the euro wants to do. But here we are making a higher low, and if this starts to accelerate back up, it's just been so difficult to call the direction of the currencies. British pound, through all of this Brexit stuff, it just trades so tightly in this range, a couple of pennies. PPO right at zero. Is this going to turn and crash down here, or is it going to turn and accelerate higher? I just don't have the right answer yet. Again, everything is pinned together here. So this is on the daily chart, and you can just see no real decisive action there. The Japanese yen, after shooting up 2 weeks ago, so it made a higher high, a higher high, a higher low, broke out of this little trading range for 3 or 4 weeks, shot up, and immediately reversed it. And now the PPO looks like it wants to roll over and go back below zero. So perhaps the yen is going to fall, and usually a falling yen is good for the Nikkei. Continuing to watch that. Again, all of these are just, as the US dollar approaches, they all look like they want to break down. This Nikkei looks like it wants to break down to me, or the yen here wants to break down to me, and it hasn't. So we'll just keep watching. One of the things while we're here, look at this S&P 500, this prior high back in January 2018, where today was the first time we moved back above that prior high, the intraday high. So that's another important clue here. It looks like we're trying to at least go back and retest the highs from September. Here's the Canadian dollar. And the point I want to make on the Canadian dollar is this is starting to bounce here and looks like it wants to turn higher on a weekly basis. The Canadian dollar usually follows crude, but obviously this has been working its way lower and crude's been working its way higher. So it definitely hasn't been following it as tight as it usually does. And here we are on the daily basis with the Canadian dollar pulling back again. Looking at the Australia dollar, we're sitting here grinding down into this far corner on a weekly chart. Again, lower highs and lower lows, but we're up near the top of the range. PPO is pointed higher here, suggesting it wants to go higher. But again, we just keep testing this $70 level. So I'd say everything is set up so tight. If the euro was to break out, all of these charts would break below major support and resistance levels. And I think that would be something for us to watch closely, because when you have a big swing in the currencies, especially the US dollar, that usually motivates a change in all the other charts. So that's one of the reasons to keep an eye on it. Okay, so right now we've got a little bit more information on Stock Chart's 20th anniversary, so we're going to just break for that, and I'll be right back.
Join us April 1st to April 5th to celebrate our 20th anniversary here at StockCharts.com with special guests Arthur Hill, Greg Morris, Gaddis Rose, Martin Pring, and John Murphy. Tune in to Market Watchers Live at 12 p.m. Eastern Standard Time during the week of April 1st to April 5th to help us celebrate.
We're back looking at the internal breadth measurements. And what I want to talk about here is this is the advanced decline line. And you can see that we had this big, I'm using a momentum or a moving average here of 11 periods. What you see is this huge run up, and then we started to get weaker and weaker. And even last week, we were dropping down. And then all of a sudden, roughly mid last week, we started to break out. So in 1 week, we've literally pushed all the way back up. And this is kind of as strong as it's been getting for the last 2 years. So we're going to see if this is kind of where it stalls out, or do we actually make higher highs here. But what we notice on the actual advanced decline line is this is pushing up. And again, we've been going up for almost 7 days in a row here. So it's been quite a climb. But while we do that, I think it's important just to be aware of one of the other traits that I keep watching that just doesn't want to break out. And this is the moving 8-period moving average for the NASDAQ high low. And what we see is when it's weak up in here, this is in early October when all of a sudden it started to break down. So we're right near this zero level, but we're still holding above. So everything's fine. But again, this is what a big bull market looks like, is when we're well above these this 100 level. And you can see we just keep grinding. And so far we've been making lower highs and lower lows since mid-February. So this is what's concerning me. And one of the reasons I was getting bearish. And obviously, if the banks are going to start to break out here, that would, throw this out the door, and you basically got to run with what the banks are telling us. So really difficult to try and discern from the breadth information what's going on. And here's the advanced decline line for the New York Composite. And this is pushing to higher highs. This is clearly bullish. And up here, this is running hotter. We're seeing up at the kind of the levels where it tops out usually. And this is when the market basically started to roll over from late August. That's when the advanced decline line started to make highs back here and then started to get weaker into September. But the market ended up going higher for a full month. So as we're watching these indicators, one of the things I'm trying to be aware of is this advanced decline line going to top out? And even late March, it looked like it was ready to go negative. And then all of a sudden, after putting in lower highs and then a really low high, all of a sudden it surged back up again here. So it seems to be breaking out of this trading range and it wants to go higher. Now, I have a whole bunch of other things that concern me, but one of the things that I want to keep watching is how high is this net new highs going to go? And you can see we just keep getting to this bearish level that we got back here in 2015 and really couldn't do much with. And then in 2016, we started to shoot up here to 200. And this was, basically 6 weeks off the low. We were starting to hit these numbers. Well, here we are, 3 months going on. We're starting to work our way into the fourth month, and we just can't get that level of robustness. Now, in 2018, we went all summer while the market slowly ground higher, and then that was enough to kind of get us going, but not enough to stabilize a big bull push. And so that's one of the reasons I'm frustrated here. I just don't have the advanced decline line data says everything is bullish, but this does not. So looking at the advanced decline line for Canada, this continues to make lower highs. We're back kind of to the levels where we would normally just surge up and then top out, and declining highs a little bit concerning. All of a sudden we're starting to push to higher highs here. So maybe the market has enough breadth in it to go, and I think if the banks on both sides of the border go, that's pretty helpful to see, because again, the banks are the ones that we'd worry about the most, and those weak bank charts were one of the reasons to be cautious. Now, again, with the weak employment data from today, and it's the third month of that, and we've got another employment marker coming out on Friday, all of those things continue to suggest, being cautious. And here we have the high lows for the Canadian data, and you can see that we ended up, I'm trying to get this to zoom in, you can see we've been making a lower high towards the end of March, and we're down near the zero level. Now this can rally, the Canadian market can rally while we're above zero, but for the most part, the big bull push happens when we get this big sort of a whole bunch of stocks making new highs, not just a few. So it's one of the reasons I continue to be concerned about the overall strength of the market. So looking through some of the stock charts indicators, one of the things obviously would be, well, how many stocks at least have positive momentum? And I thought this would be a very easy chart to pull up and find out the data for us. But what happened was, this is the intermediate breadth momentum oscillator for from the decision point work from Carl Swenlin and Aaron Heim. And what you see here is I put a moving average on here, and this goes back a long period of time. And you can see in 2014-15, you were starting to dip down. October, you surged up to 95%, rolled back down. And this was, pretty compelling. And if you looked in on the MACD, and the PPO doesn't work, and I'll explain that another time. But bottom line is, here's the '09 low coming off there. You surge up to plus 50. Here you are in October, or sorry, early September 2016. You surge up, and here you are surging up to this 50 level. The only 3 times you've got up here have been the initiation moves for big bull markets. So this suggests much more bullishness than we probably might expect. So anyway, that's one of the concerns I have here, is just watching stuff like this information come through and show a lot of strength. And I just want to go show one more chart here. I'm just going to go grab it. I think I just threw it right at the bottom. So what this one is the percentage of stocks that have a rising PMO on the NASDAQ 100. And I thought, that might just be a good trade. How many stocks at least are rising? Well, in this case, the PPO is below 0 and starting to turn back up. And if we look back in 2009, what we see is all of these big spikes below 0, and then it rallies back up. And if it stalls at 0, that's a problem. Well, in early '09, we had the big rally, or late 2008. Then we failed, went down to the March lows, then rallied back up in early April. And there was actually a big pullback in the S&P in early April that's not so evident on the chart. I didn't make this a log chart. I should have. And then we took off to the moon after that. But even if you just looked at the moving averages here, this was a big pullback. In 2014, 15, 16, there was no clues from this data whatsoever. And here you have this big sudden surge up to the top of the range. We had that in early 2018. And what did that mark? It actually marked the top, not the place to get on board and get more aggressive. So again, just trying to figure out what's going on here. And this indicator is the percentage of stocks within the NASDAQ 100 that have a rising PMO. And 97, 96, 95, 93, these are really high levels. But it didn't indicate anything. Like in 2010, we had a big push up to 92, and it rolled right over again. So even if you just took the moving averages, and I took a 20 period here, but you see in early '09, this was a very bullish move in April. And then you saw this big push up in 2010. It was almost after the lows because we started to run here, and I think we got more Fed stimulus in there. And then 2012, you'll remember we were chopping around. The market basically wasn't going anywhere, struggling to get through prior highs, and that's when we had QE infinity, and that just took all volatility out, and we went flatline. Everything just kept running. So anyway, in early 2018, we surge up to the top, and things can't get any better, and we get all euphoric, and it rolls over. And so here we've just surged to the top, and now it's starting to pull back. So it doesn't matter what breadth measurement I go look at. There's really mixed data. And the one thing that I would say is the McClellan oscillators keep pointing to lots of breadth out there. And so that would be something else to be aware of. Anyway, when I look through the charts, I would just say it's very tricky here. But I think if the banks are going to start to break out, we're going to have to follow that lead and enjoy that ride. If the banks are going to start to move, obviously strong banks usually indicate a strong economy. So that would be a big clue for me. Okay, one of the other areas that's starting to get interesting is the lumber area. And I just want to go get those stocks. Actually, I think I call them forestry. And one of the reasons I wanted to just quickly poke my head in on these is they can be part of the home builders and that kind of stuff, and be early signs of the market breaking out. So here we have a scooter ranking on this Canwell Holdings, very weak, and it's starting to kick up, pull back, and now it looks like it wants to break out back through the 200-day moving average. Now, these ones are all the Canadian ones. I think there's a few US ones in here. So let's just quickly flip to a weekly chart here, and what you see is this momentum is trying to get back above zero here. I'm just going to change it so all the stocks have the same chart, and then quickly look at them through 10 per page. And what I'm doing here, again, I had a daily chart up. I pull up a weekly, change all the charts to weekly. You can move back and forth through these if you've got your industry chart list set up. So this one's trying to get through its 40-week moving average. Here's Universal Forest Products, and it's just struggling right here. And there's a down sloping trend line here. Starting to see a breakout above that, I'd want to get bullish on this area of the market again. Here's UFS Domtar. This is packaging, and you can just see it recently broke out, pulled back, and now it looks like it wants to reaccelerate. So we'll see if that's what's going to happen here. This chart's right up against its 40-week, and there's a downslope in momentum. And again, we have so many of these charts that typically, if they just stalled here, who'd be surprised? But if they break out from here, we kind of got to get on board. Acadian timber is rolling over right at the zero level. So until it starts to pick up, I'd want to wait. Here's International Paper, big company out of the US. Look at this downsloping trend line. It's already broken the downtrend in momentum, and it's just starting to turn back up here and move above the 10-week and the 40-week. So this looks quite bullish, and not exactly, not a place I want to short. We're right at resistance here, this 47.50, but to me, it looks like it wants to go higher, not lower. Here's Weyerhaeuser, and you can see this has been pushing up, and this 26 level has been difficult to get through. It's starting to work its way higher again. Full stochastic starting to improve. Momentum is pointed straight up, so that looks pretty good. Neenah Paper, this one's making a higher low here and trying to get back through the 10-week. Full stochastic turning up around 50. That's usually a bullish sign. Resolute Forest Products, this one's been in a grinding downtrend, really choppy in here, but smoothed out for the last few months, just holding around this 11 level. And the PPO right at zero, if this is going to start to turn up and higher right here, that's a very bullish place to get on board. This was originally the stock that got me to go and look at them, Western Forest Products. And the reason is the PPO is just starting to turn back up again. It's making a higher low. And you can see the stock was actually kind of basing around here. So this got cut in half, or about 30 or 40% off. Mid last year, topped out with the Canadian stock market, and then pulled all the way back down, and in December just made the same low. It's recently pulled back almost to the same range. So can it start to turn its way higher here? This would be a pretty nice place to get on board. Going into West Fraser Timber, this chart's also been downtrending and starting to try and get its way working higher. Norboard, big particle board manufacturer, you can see it's grinding sideways here and trying to get going. So with all of this, these charts are trying to start to break out. If they do, I think you want to be aware of it and get back on board. Anyway, with that, thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific on Stock Charts TV. You can also catch replays on the Stock Charts YouTube channel or on Stock Charts TV, which has a running list of technical charting informational shows. Thank you.